Even with a small budget, your nonprofit can achieve a big impact. It's not about how much money you have, it's about how smart you are with it. Today, we're sharing actionable tips to help your nonprofit stretch every dollar and maximize its impact. Let's dive in. Tip number 1, focus on your mission. Every dollar spent should directly contribute to achieving your goals. Review your budget and identify expenses that aren't essential. For example, instead of spending on excessive marketing materials, switch to free or low-cost digital strategies. Put your money where it matters most: program delivery and community impact. Tip number 2, leverage in-kind donations. Instead of buying everything you need, ask for donations of goods or services. You'd be surprised how many businesses are willing to help. Here's a quick script to get you started. Our nonprofit focuses on your mission. Would you be willing to donate a specific item or service to help us? Simple and effective. Tip number 3, partner with others to share resources. Collaboration can save money and amplify your impact. For example, you could share office space, co-host fundraising events, or even borrow expertise from skilled volunteers. Partnerships can open doors to resources you didn't know were possible. Tip number 4, take advantage of free or low-cost tools. There are so many platforms designed to help nonprofits manage their finances and operations without breaking the bank. For example, DonorBox for fundraising, Wave accounting for financial management, and Trello for project planning. Just be sure to evaluate tools to ensure they fit your specific needs. Tip number 5, engage your supporters creatively. People give to causes that feel personal, so tell compelling stories about your impact. Share photos, videos, or testimonials that show exactly how donations make a difference. Monthly updates highlighting small wins are a great way to keep your donors engaged and excited. Small budgets don't have to limit your dreams. By focusing on your mission, leveraging donations, partnering for resources, using free tools, and engaging supporters, your nonprofit can achieve incredible things. If you found these tips helpful, give this video a thumbs up and subscribe to WealthWise for more financial advice for nonprofits. Together, let's make a difference.
Nonprofit financial reporting is more than just numbers on a page. It's about building trust. Donors want to see how their contributions are being used. Clear and accurate financial reporting shows donors you are responsible stewards of their generosity. This builds confidence and encourages continued support. Transparency isn't just good practice, it's the law. Nonprofits must follow strict regulations, including filing annual financial reports. These reports, available to the public, demonstrate accountability and compliance with legal requirements. Openness about your finances strengthens your organization's reputation. It demonstrates integrity and a commitment to using resources effectively. This builds credibility with funders, partners, and the community. Transparency is vital for long-term sustainability. When donors trust you, they are more likely to give again and encourage others to do the same. This ongoing support allows you to plan for the future and maximize your impact. Nonprofit financial reports provide a snapshot of your organization's financial health. They show where money comes from, how it's spent, and what's left over. Key statements include the income statement, balance sheet, and cash flow statement. The statement of activities details revenues and expenses. Revenues include donations, grants, and fees. Expenses cover program costs, overhead, and fundraising. The statement of financial position shows assets, liabilities, and net assets. The cash flow statement tracks cash movement. Together, these statements provide a comprehensive financial picture. Nonprofits often receive funds designated for specific purposes. These restricted funds come with donor stipulations that dictate how the money can be used. For example, a grant might be earmarked for a particular program, or a donation might be designated for capital improvements. Tracking restricted funds separately from unrestricted funds is crucial. Unrestricted funds offer greater flexibility, allowing you to cover operating expenses, launch new initiatives, or allocate resources where they are most needed. maintaining separate accounting for restricted and unrestricted funds ensures compliance with donor wishes and legal requirements. It demonstrates accountability and responsible stewardship of resources. Transparency about restricted funds is essential for building trust with donors. When donors see that their contributions are being used as intended, they are more likely to give again. Clear and accurate reporting on restricted funds demonstrates your commitment to honoring donor intent. Nonprofits operate within a framework of laws and regulations. Understanding and complying with these requirements is essential for maintaining your tax-exempt status and public trust. The Form 990 is an annual information return that most tax-exempt organizations must file with the IRS. This comprehensive form provides details about your organization's mission, programs, finances, and governance. Filing Form 990 accurately and on time is not optional. Failure to do so can result in penalties, including the loss of your tax-exempt status. This would have significant consequences for your organization's ability to operate and raise funds. The Form 990 is a public document. This means anyone can access information about your organization's finances, governance practices, and executive compensation. Transparency in this area is essential for building trust with donors and the public. Navigating the complex world of nonprofit regulations can be daunting. Consult with a qualified professional to ensure you understand your obligations and are in compliance with all applicable laws. Section 5. Best practices for accurate and efficient reporting. Accurate and efficient financial reporting is crucial for nonprofit success. By implementing best practices, you can streamline processes, reduce errors, and enhance transparency. Record keeping. Maintain detailed records of all income and expenses. Keep original documentation such as invoices, receipts, and bank statements. Use a consistent chart of accounts that aligns with nonprofit accounting standards. Account reconciliation. Reconcile bank statements monthly to ensure accuracy and identify discrepancies. Review and reconcile accounts payable and receivable regularly. Implement internal controls to prevent errors and fraud. Accounting software. Utilize accounting software specifically designed for nonprofits. Take advantage of features like fund accounting, budgeting, and reporting tools. Explore cloud-based solutions for accessibility and data security. Implementing these best practices strengthens financial controls, reduces the risk of errors, and enhances the reliability of your financial information. This builds confidence with donors and stakeholders. Section 6. Common pitfalls and how to avoid them. Nonprofit financial management presents unique challenges. Understanding these common pitfalls and implementing strategies to avoid them is crucial for maintaining financial health. Donor restrictions. Clearly document all donor restrictions and ensure they are properly tracked. Communicate restrictions to relevant staff members to prevent unauthorized use of funds. Regularly review restricted funds to ensure compliance and timely utilization. Multiple funding sources. Develop a system for tracking income and expenses by funding source. Allocate indirect costs appropriately across funding streams. Ensure compliance with reporting requirements for each funder. Inadequate internal controls. Implement strong internal controls to safeguard assets and prevent fraud. Segregate duties to reduce the risk of errors or misconduct. Conduct regular audits to assess the effectiveness of internal controls. By proactively addressing these common challenges, nonprofits can strengthen financial management practices, reduce risks, and ensure long-term sustainability. Section 7. Software solutions for streamlined financial management. Technology plays a vital role in simplifying nonprofit financial management. Accounting software designed specifically for the nonprofit sector offers a range of features to streamline processes, improve accuracy, and enhance reporting. Fund accounting. Track restricted and unrestricted funds separately to ensure compliance and transparency. Generate reports that show the financial position of each fund. Allocate expenses accurately to specific funds. Budgeting and forecasting. create and manage budgets for different programs and departments, track actuals against budget and analyze variances, develop financial forecasts to support strategic decision-making, reporting and analysis, generate custom reports to meet the needs of donors, board members, and funders, analyze financial data to identify trends, track key performance indicators, and make informed decisions, automate reporting tasks to save time and reduce errors. Investing in the right accounting software can significantly improve the efficiency and effectiveness of your financial management processes. This frees up valuable time and resources to focus on your mission. Section 8. Investing in your team. Training and professional development. Strong financial management relies on a knowledgeable and skilled team. Investing in training and professional development for staff members involved in financial operations is essential. Basic accounting principles. Ensure staff members understand fundamental accounting principles, such as accrual accounting and double-entry bookkeeping. Provide training on nonprofit-specific accounting standards and reporting requirements. Offer opportunities for continuing education to stay updated on industry best practices, software proficiency. Train staff members on how to effectively use your chosen accounting software. Provide ongoing support and resources to maximize software utilization. Encourage staff to explore advanced features and functionalities, internal controls and compliance. Train staff members on internal control procedures and the importance of compliance. Educate staff on fraud prevention measures and how to identify red flags. Provide clear guidelines and policies for financial transactions. By investing in your team's financial literacy and skills, you empower them to make informed decisions, manage resources effectively, and contribute to the long-term sustainability of your organization. Section 9. Take charge of your financial future. Organize, subscribe, and share. Don't let financial management feel overwhelming. Organize your financial data. Use cloud-based solutions for secure data storage. Stay informed about financial management best practices. Subscribe to newsletters and resources for insights. Communicate financial transparency to your team. For more insights, please subscribe.
Imagine you're navigating a ship through unpredictable waters. The sea can be calm one moment and stormy the next. You need to be prepared for anything that comes your way. Scenario analysis is like having a map that shows you different routes, depending on the weather. It's a strategic planning method that helps you anticipate and prepare for various future scenarios. It helps you prepare for different possibilities. By considering multiple potential outcomes, you can make informed decisions and avoid being caught off guard. This makes your journey safer and more successful. You can navigate through challenges with confidence, knowing you have a plan for various situations. Non-profits like ships face uncertain futures. Funding might change. Economic conditions, donor priorities, and community needs can all shift unexpectedly. The needs of the community might evolve. What was once a priority may no longer be relevant, and new challenges can emerge. Scenario analysis helps non-profits prepare. By exploring different scenarios, they can develop strategies to address potential changes and ensure they remain effective. It allows them to thrive in a changing world with a clear understanding of possible futures. Non-profits can adapt and continue to serve their communities effectively. This guide explains scenario analysis in simple terms. It breaks down the process into easy-to-follow steps, making it accessible for everyone. It's designed specifically for non-profits. Whether you're a small community organization or a large international NGO, this guide will help you navigate the complexities of the future. We'll explore the steps involved, from identifying key uncertainties to developing detailed scenarios. You'll learn how to create a robust plan. We'll also look at the benefits and how technology can help. Tools like data analysis, software, and collaborative platforms can enhance your scenario planning process. Are you ready to navigate the future with confidence? Let's begin. Together, we'll chart a course for success. Every journey starts with a destination. Just like a traveler needs to know where they are headed, organizations need to identify their key drivers to navigate their path to success. In scenario analysis, we begin by identifying key drivers. These drivers are the fundamental elements that influence the direction and outcome of our strategic plans. These are the factors that will most likely affect our organization's future. They can be internal, like organizational culture and resources, or external, such as market trends and economic conditions. Think of key drivers as signposts on a road. They guide us, showing the way forward and helping us avoid potential pitfalls. They point us in the right direction, ensuring that we stay on course and make informed decisions. They help us understand what to watch out for. By monitoring these drivers, we can anticipate changes and adapt our strategies accordingly. Key drivers for non-profits can be external or internal. External drivers include factors like economic conditions, regulatory changes, and societal trends. External drivers are things happening outside. These could be economic changes, new government policies, or shifts in public opinion. Keeping an eye on these factors helps us stay prepared for external shifts. Internal drivers come from within. These include organizational culture, leadership, and internal processes. These could be fundraising goals or changes in staffing. Internal drivers are crucial as they directly impact our day-to-day operations. Identifying key drivers is a team effort. It requires input from various stakeholders to ensure a comprehensive understanding. Gather your staff, board members, and volunteers. Brainstorm together. Discuss and identify the most significant factors that could impact your organization. What are the most significant factors that could impact your organization in the next few years? By identifying these key drivers, you can better prepare for the future and steer your organization towards success. Now that we know our key drivers, it's time to create scenarios. Scenarios are stories about the future. They help us imagine different possibilities. We don't need to predict the future, that's impossible. Instead, we create a few plausible scenarios. Each scenario explores a different way the future could unfold. A common approach is to develop 3 scenarios. Optimistic scenario, everything goes well, funding increases, demand for your services grows. Pessimistic scenario, challenges arise, funding decreases, the need for your services declines. Most likely scenario, this scenario falls somewhere in between. It's a balanced view of the future. We have our scenarios. Now, let's analyze how each scenario might impact our organization. This is where we put ourselves in each story. We ask, what would this mean for us? Let's say one scenario involves a decrease in government funding. How would this impact your programs? Would you need to reduce services? Could you find alternative funding sources? By analyzing the potential impacts of each scenario, we gain valuable insights. We begin to understand our organization's vulnerabilities. We also identify potential opportunities. This step is crucial for informed decision-making. It helps us move from reacting to change to anticipating and preparing for it. Section 5, Step 4. Develop adaptive strategies. We've explored different scenarios and their potential impacts. This exploration has given us a comprehensive understanding of the various challenges and opportunities that may arise. Now it's time to develop adaptive strategies. These strategies will help us navigate through uncertainties and ensure that we are prepared for any situation. These are flexible plans that can be adjusted based on how the future unfolds. Flexibility is key in a rapidly changing environment, and having adaptable plans allows us to pivot quickly. Think of adaptive strategies as having different tools in your toolbox. Each tool serves a specific purpose and can be utilized when the situation demands it. If one tool doesn't work, you have others to choose from. This variety ensures that we are not reliant on a single approach and can adapt as needed. For example, in a scenario with increased demand for your services, you might need to expand your volunteer base. This could involve recruiting new volunteers or training existing ones to take on additional responsibilities. In a scenario with decreased funding, you might need to streamline your programs. This could mean prioritizing essential services and finding innovative ways to cut costs without compromising on quality. Developing adaptive strategies helps us stay agile. Agility allows us to respond swiftly to changes and seize new opportunities as they arise. We become more resilient to change. Resilience is about bouncing back from setbacks and continuing to move forward despite challenges. No matter what the future holds, we'll be ready. With adaptive strategies in place, we can face any challenge with confidence and determination. Section 6. The benefits of scenario analysis for nonprofits. Scenario analysis offers numerous benefits for nonprofits. First, improved strategic planning. By considering multiple futures, nonprofits can develop more robust and adaptable strategic plans. Next, enhanced risk management. Scenario analysis helps identify potential threats and opportunities, enabling proactive risk mitigation. Then, increased organizational agility. Developing adaptive strategies prepares nonprofits to respond effectively to unexpected events. More informed decision-making. Scenario analysis provides a structured framework for evaluating options and making sound decisions. Finally, stronger stakeholder engagement. Involving stakeholders in the scenario analysis process fosters collaboration and buy-in. Section 7. Technological trends in scenario analysis. Technology is transforming how nonprofits conduct scenario analysis. Here are a few trends to watch. First, data analytics. Powerful data analytics tools can process vast amounts of information to identify trends and inform scenarios. Next, simulation software. Sophisticated software can simulate different scenarios and their potential impacts, providing valuable insights. Finally, collaborative platforms. Online platforms facilitate collaboration among team members, enabling seamless scenario planning and analysis. Section 8. Conclusion. Embracing a future-proof mindset. The future is full of unknowns, but uncertainty doesn't have to lead to fear. By embracing scenario analysis, nonprofits can navigate the future with confidence. Scenario analysis is not about predicting the future, it's about being prepared for different possibilities. It's about building a more resilient and adaptable organization. By following the steps outlined in this guide, nonprofits of all sizes can benefit from scenario analysis. It's a powerful tool for ensuring long-term sustainability and impact. Section 9. Call to action. Start planning for tomorrow today. Don't wait for the future to happen to you. Start planning for it today. Gather your team, explore different scenarios, and develop adaptive strategies. Remember, the most successful nonprofits are not those that predict the future. They are the ones that prepare for it.
Welcome to our guide on financial forecasting for nonprofits. Today we'll walk you through a step-by-step approach to ensure your organization stays financially healthy and aligned with its mission. Let's dive in. Step 1. Start with your historical data. Collect details about your revenue streams, program expenses, administrative costs, and cash flow from the past 3 to 5 years. This data forms the foundation of your forecast. Step 2. Understand your revenue streams. Evaluate grant renewals, potential donations, and fundraising trends. Don't forget to plan for new funding opportunities. Step 3. Make realistic assumptions about future events. These include inflation rates, growth in donations, or increases in administrative costs. Step 4. Calculate your revenue. Combine renewed grants, new opportunities, and expected donations to determine total projected revenue. Step 5. Forecast your expenses by adjusting last year's costs for program growth and inflation. Include program costs, administrative expenses, and new initiatives. Step 6. Map out cash inflows and outflows month by month. Identify periods where funding might be tight and plan accordingly. Step 7. Prepare for uncertainties with scenario analysis. Plan for optimistic and pessimistic outcomes to ensure resilience. Step 8. Validate your forecast with team members. Ensure assumptions are practical and align with your organization's goals. Step 9. Share your forecast with stakeholders and create a dashboard to track actual performance versus projections. Adjust as needed throughout the year. By following these steps, your nonprofit can navigate financial challenges and focus on its mission. Accurate forecasting empowers decision-making and ensures long-term sustainability. Subscribe for more insights on nonprofit financial success.
The heart of the matter finance teams fuel nonprofit impact. Nonprofits do amazing work. They serve our communities. They tackle tough challenges. From providing essential services to advocating for change, their impact is profound and far-reaching. At the heart of every successful nonprofit is a dedicated finance team. These unsung heroes work tirelessly behind the scenes, ensuring that every dollar is accounted for and used effectively. This team might be small, but they have a big responsibility. They are the backbone of the organization, providing the financial oversight needed to keep operations running smoothly. They manage the organization's resources. They ensure financial stability. By carefully planning and monitoring budgets, they make sure that funds are available for critical programs and services. They empower the nonprofit to fulfill its mission. Without their diligent work, many initiatives would struggle to get off the ground. A strong finance team is not just about crunching numbers. It's about providing insights that drive strategic decisions. They analyze data to forecast future needs and opportunities. It's about understanding the why behind the numbers. They interpret financial data to tell a story, helping the organization understand its financial health and plan for the future. It's about being strategic partners. They work closely with other departments to align financial planning with the organization's goals and mission. It's about helping the nonprofit make the biggest impact possible. By ensuring financial health, they enable the organization to focus on what it does best, serving the community. When we empower our finance teams, we empower our entire organization. Their work is crucial to the success and sustainability of nonprofits, making a lasting difference in the lives of those they serve. Investing in growth, equipping your finance team for success. This is not just a one-time effort, but a continuous journey. How do we empower our finance teams? It starts with understanding their needs and challenges. We start by investing in their growth. This involves not only financial investment, but also time and resources. This means providing them with the right tools and training. Technology is constantly evolving, and staying updated is crucial. Finance teams need access to modern software. This includes accounting software, budgeting tools, and financial reporting dashboards. These tools streamline processes and provide real-time insights, making their work more efficient and effective. This allows the team to focus on strategy. With the right tools, they can spend less time on manual tasks and more time on strategic planning. Training is just as important as technology. Continuous learning ensures that the team is always at the top of their game. Finance teams need opportunities to enhance their skills. This can be achieved through various forms of training. This could be through workshops, conferences, or online courses. Each of these platforms offers unique benefits and learning experiences. These opportunities keep them updated on the latest regulations and best practices. Staying informed is key to maintaining compliance and driving success. By investing in both technology and training, we create a finance team that is not only skilled, but also motivated and ready to tackle any challenge. Leading with purpose, cultivating a culture of financial empowerment. Empowerment starts at the top. Leaders must create a culture that values financial transparency and accountability. This means involving the finance team in strategic decision-making. It means giving them a seat at the table. Their insights are essential. Leaders should encourage open communication. This allows the finance team to share their expertise freely. It also allows them to raise concerns without fear. When leaders trust their finance team, it empowers them to perform at their best. Teamwork makes the dream work. Collaboration for financial strength. Finance is not a siloed function. It touches every aspect of a nonprofit's operations. To be truly effective, finance teams need to collaborate closely with other departments. This fosters a shared understanding of the organization's financial health. Cross-functional collaboration breaks down barriers. It leads to better decision-making. For example, the finance team can work with program staff. Together, they can develop realistic budgets. They can track program expenses effectively. This ensures that programs are both impactful and sustainable. Beyond the numbers, measuring impact and celebrating success, finance teams are more than just number crunchers. They are impact champions. They help the nonprofit measure the effectiveness of its programs. They demonstrate the value of the organization's work to funders and stakeholders. By tracking key performance indicators, finance teams provide valuable data. This data tells the story of the nonprofit's impact. It shows how donations are making a difference. This data-driven approach is essential for securing future funding. Real-world inspiration, nonprofits leading the way. Many nonprofits are already leading the way in empowering their finance teams. Take, for example, the American Red Cross. They have implemented a robust financial management system. This system provides real-time visibility into their finances. This empowers them to respond quickly and effectively to disasters. Another example is the YMCA. They have developed a culture of financial transparency. They actively engage their board members in financial oversight. This has led to increased accountability and improved financial sustainability. Empowering change. Unleashing the full potential of your finance team. This journey begins with recognizing the unique strengths and capabilities of each team member. By fostering a culture of collaboration and continuous learning, you can create an environment where everyone thrives. Empowering your finance team is not a one-time event. It involves regular training sessions, workshops, and brainstorming meetings to keep everyone updated with the latest trends and technologies in the finance sector. It is an ongoing process. This means continuously refining workflows, improving process management, and working on strategic initiatives that align with your organization's goals. It requires a commitment to continuous improvement. Regularly analyzing data and feedback helps in identifying areas for enhancement and ensures that the team is always moving forward. It requires a willingness to embrace innovation. Adopting new technologies and innovative practices can significantly boost the efficiency and effectiveness of your finance team. By providing your finance team with the right tools, training, and support, you can unleash their full potential. This includes investing in advanced software, offering continuous education opportunities, and ensuring they have access to necessary resources. You can empower them to become strategic partners. When your finance team is well-equipped and knowledgeable, they can contribute valuable insights and strategies that drive the organization forward. You can ensure that your nonprofit has the financial strength to achieve its mission. A strong finance team can help in setting realistic financial goals and developing plans to meet them. Remember, investing in your finance team is an investment in the future of your organization. Continuous development and training programs are crucial for keeping the team motivated and skilled. It is an investment in the communities you serve. A capable finance team ensures that your organization can make a meaningful impact. Please subscribe for more insights about nonprofits. Welcome to our guide on nonprofit financial planning. Today, we'll explore how budgeting and forecasting complement each other to drive smarter decision-making and financial sustainability. Budgeting is a financial plan, a roadmap that outlines your organization's revenue and expense goals for a specific period, typically a year. Forecasting, on the other hand, predicts future financial performance based on trends, assumptions, and real-time data. While a budget is static, a forecast is dynamic and evolves with changing circumstances. Forecasting is the foundation for creating a realistic budget. It provides insights into expected revenues and expenses, helping nonprofits allocate resources effectively. Your budget establishes financial goals, while forecasting monitors your progress and flags any variances. This combination helps you stay on track or pivot when needed. Forecasting helps nonprofits stay flexible by enabling mid-year budget revisions based on new information, such as unexpected grants or funding changes. For example, let's say a new grant is received mid-year. The forecast would then incorporate $750,000 in additional revenue. This allows the organization to adjust the budget to allocate funds effectively. Budgeting ensures financial discipline and resource allocation, while forecasting helps you adapt to changing conditions. Think of the budget as what should happen, while the forecast is what is likely to happen. For instance, if the forecast shows lower than expected funding, you might need to scale back on program expansion. Together, budgeting and forecasting create a comprehensive financial planning system, helping nonprofits achieve their goals efficiently. You start by developing the budget using forecasts. Then, you monitor with updated forecasts. If necessary, you adjust the budget. Finally, you report the results to stakeholders. By combining the structure of budgeting with the flexibility of forecasting, your nonprofit can navigate financial uncertainties and focus on making an impact. Thanks for watching, and don't forget to subscribe for more insights into nonprofit financial management.
A nonprofit audit is a thorough examination of an organization's financial records. This process ensures that the nonprofit is managing its funds responsibly and transparently. Audits are essential for maintaining public trust. They demonstrate accountability to donors, funders, and the community. By undergoing regular audits, nonprofits show their commitment to good governance and financial integrity. Think of an audit as a health checkup for your organization's finances. Just like a doctor checks your vital signs, an auditor examines your financial records to ensure everything is in order. A clean audit report provides assurance to stakeholders that your organization is managing its resources effectively and ethically. This builds confidence and encourages continued support for your mission. Nonprofits rely heavily on public trust to fulfill their missions. Donors want assurance that their contributions are being used wisely and effectively. An audit provides that assurance by independently verifying the organization's financial information. This transparency strengthens the bond between the nonprofit and its supporters. Without regular audits, nonprofits risk damaging their reputation and losing the trust of their stakeholders. Financial mismanagement, even if unintentional, can have serious consequences for an organization's credibility. Audits help mitigate this risk by providing an objective assessment of financial practices. The audit process begins with selecting an independent auditor. They issue an opinion on the financial statements. The auditor sets a timeline and scope. Next, gather and prepare financial documents. This includes bank statements and expense reports. The auditor verifies accuracy and completeness. They assess internal controls. Fieldwork includes interviews and site visits. This helps understand operations and financial practices. Findings are communicated to management and the board. The audit report summarizes findings and opinions. A clean report means no material misstatements. Significant issues and recommendations are highlighted. Preparing for an audit can seem daunting, but it doesn't have to be. By following some key best practices, nonprofits can streamline the process and ensure a smooth audit experience. One of the most important steps is to organize your financial records. This includes ensuring that all transactions are properly documented and that supporting documentation is readily available. Reconciling bank accounts regularly is another crucial aspect of audit preparation. This involves comparing the organization's bank statements to its own records to identify any discrepancies. By reconciling accounts monthly, nonprofits can catch errors early on and prevent them from becoming bigger issues during the audit. Maintaining a strong internal control environment is also essential. This involves establishing policies and procedures to safeguard assets, ensure accurate financial reporting, and comply with applicable laws and regulations. A well-designed internal control system can help prevent fraud and errors, making the audit process much smoother. Finally, communication is key throughout the audit preparation process. Regular communication between management, staff, and the auditor can help ensure that everyone is on the same page and that any questions or concerns are addressed promptly. By working collaboratively, nonprofits can create a positive and productive audit experience. While audits are essential, they can present challenges for nonprofits. Clear documentation is crucial. Establish document retention policies and train staff. Open communication prevents misunderstandings. Regular meetings and clear expectations help. Strong internal controls reduce risks. Segregate duties and conduct regular reviews. Document responsibilities and cross-train staff. Ensure continuity during staff changes. In conclusion, nonprofit audits are an essential aspect of organizational transparency and accountability. By embracing audits as an opportunity for improvement rather than a burden, nonprofits can strengthen their financial management practices and build greater trust with their stakeholders. Early preparation is key to a successful audit. By organizing financial records, reconciling accounts, and maintaining strong internal controls, nonprofits can streamline the audit process and minimize the risk of surprises. Regular communication with the auditor is also crucial for addressing questions, clarifying expectations, and ensuring a smooth and efficient audit experience. Seeking expert guidance can be invaluable throughout the audit process. Experienced auditors can provide valuable insights, identify potential areas of concern, and offer practical recommendations for improvement. By leveraging the expertise of qualified professionals, nonprofits can navigate the complexities of audits with confidence and achieve positive outcomes. Remember, transparency and accountability are not just boxes to be checked, but fundamental principles that should guide every aspect of a nonprofit's operations. By embracing these principles and embracing the audit process, nonprofits can demonstrate their commitment to good governance, strengthen their financial health, and ultimately advance their missions more effectively. Section 6. The importance of financial statements, a clear window into your organization. Financial statements are the cornerstone of any audit. They provide a snapshot of an organization's financial health and performance. For nonprofits, these statements show how effectively resources are used to fulfill their mission. The three primary financial statements are the balance sheet, the income statement, and the statement of cash flows. Accurate financial statements build trust with donors and the public. They assure responsible financial management and effective resource use. They also help identify areas for improvement. Nonprofits should maintain accurate financial records year-round. This includes robust internal controls and regular bank reconciliations. Ensure all transactions are properly documented. This ensures financial statements accurately reflect the organization's position and performance. Section 7. The role of the auditor, an independent assessment for enhanced trust. The auditor provides an independent assessment of financial statements. They ensure accuracy and compliance with GAAP. Auditors examine records, test controls, and verify balances. Their goal is to ensure no material misstatements. Independence is crucial for objectivity. This ensures reliable assurance for stakeholders. A clean audit opinion enhances credibility and trust. Section 8. Beyond compliance, leveraging audits for organizational improvement. While audits are primarily associated with compliance and accountability, they can also serve as valuable tools for organizational improvement. The audit process can highlight areas where financial management practices can be strengthened, internal controls can be enhanced, and operational efficiency can be improved. Auditors often provide management letters to the organization's leadership, outlining their observations and recommendations for improvement. These recommendations may address areas such as internal control weaknesses, accounting policy inconsistencies, or opportunities for cost savings. By addressing these recommendations, nonprofits can strengthen their financial operations and mitigate potential risks. Furthermore, the audit process can provide valuable insights into an organization's overall performance. By analyzing financial data and trends, nonprofits can identify areas where they are excelling and areas where they may need to make adjustments. This information can inform strategic planning, program development, and resource allocation decisions. Embracing audits as an opportunity for growth and improvement can help nonprofits enhance their financial sustainability, strengthen their governance practices, and ultimately better serve their beneficiaries. By viewing audits as a collaborative process rather than a mere compliance exercise, organizations can unlock their full potential and maximize their impact. Section 9. Conclusion: embracing audits for a stronger nonprofit sector. In conclusion, nonprofit audits are an indispensable component of a healthy and accountable nonprofit sector. They provide essential oversight, enhance transparency, and foster public trust. By understanding the audit process, preparing diligently, and embracing the opportunity for improvement, nonprofits can navigate audits successfully and emerge stronger. Remember, transparency and accountability are not merely check marks on a compliance list, but fundamental values that should permeate every aspect of a nonprofit's operations. By embracing these values and viewing audits as a collaborative process, organizations can demonstrate their commitment to good governance, strengthen their financial health, and ultimately advance their missions more effectively. For more insights and practical tips on nonprofit financial management, subscribe to our newsletter and share this valuable information with your network. Together, let's build a stronger, more accountable, and impactful nonprofit sector.